Welcome to Banking to Go by Algebra Labs. Your takeaway insights from the world of financial technology and banking. Served by today's industry leaders. My name is Nizamuddin, your host for today's episode, where we explore building an enabling environment for fintech with industry pioneer and champion for the UK's global fintech industry, Alastair Lukies CBE. I am thrilled today to welcome Alastair Lukies CBE. Al, if I may.
Cool.
Brilliant. We're friends now. Is a UK businessman, entrepreneur, best known as a pioneer and a champion of the UK's global fintech industry, working with financial institutions, investors, regulators to promote collaboration and mutual benefit across the ecosystem. Al founded Monetize in 2003, one of the UK's earliest fintechs that provided mobile banking services and technology for mobile phones to financial institutions, being recognized as a technology pioneer along the way by the World Economic Forum. Monetize was listed in the LSE's AIM index under your leadership, reaching a market cap of $2 billion with 1,700 staff under your leadership across 4 continents. Is that correct so far? What a journey so far. In 2015, you were part of the founding team of Motive Partners, an investment firm based in London and New York, focused on investing in building the next generation of financial technology companies, where you remain vice chair of the Global Advisory Council. You've been appointed by then Her Majesty's government to be the Prime Minister's Business Ambassador for Financial Services, and you were chairman of the fintech industry body Innovate Finance from 2014 to 2017. What a journey. Welcome, Alastair Lukies CBE. My goodness.
Actually just a broken rugby player, but with some fintech on the way, yeah.
Oh, is that how it all started, some rugby?
Yeah, that's what I used to do.
How did you pivot from rugby to finance? Let's begin there, actually.
I'd
love to hear.
No, it wasn't a well-laid plan. I mean, all of it's been a lot of serendipity and just meeting smart people. Sort of golden rule in life. I always knew if I was in the changing room before a game and I looked around the changing room and I was the worst player, but I was the captain, it was a really good sign, because it meant that we were probably going to have quite a good chance of doing well. And it's been the same in every business I've built. You know, I just surround myself with super smart people.
Incredible.
And yeah, just if I'm to see the future, I stand on the shoulders of giants. Yeah, that's
beautiful. I've just come back from San Francisco and I saw a very good friend of mine. His name is Tariq Azim. He's a 8-time MMA world champion, and he now spends his time training coaches about the importance and how you can compare the physical exercise of a team and how you build businesses. So actually the two make complete sense. I mean, you've been literally at the forefront of fintech since 2003. In that time, over that 20-year period, what would you say are some of the biggest insights you've taken away?
Yeah, I mean, obviously back then, fintech wasn't a thing. It sort of exploded by necessity in 2007, 2008 with the global financial crisis. So when, again, by complete luck and serendipity, I met an incredibly smart man who was working at Vodafone, who had this vision of mobile phones being able to distribute financial services far further than bank branches and ATMs, which of course we all take for granted now with M-Pesa and all of the different money transfer things. But back in the day, it was an incredible vision. And so we were a startup. We had an idea. I said to him, yeah, if the mobile industry try and take the lunch of the banks are going to try and fight back. Yeah. Same the other way around. And so is there any way of creating a sort of a collaborative model? And that proved to be the breakthrough moment. It was very hard because there was a lot of egos involved, and Vodafone were convinced that banks would be subservient to them because they had so many subscribers, and the banks were like, we give you your money and we're a provider to you, so behave. And that clash, we just became very good at navigating. We had a very lucky break. We signed a joint venture with Link, the ATM network in the UK. And of course, people think of ATMs and just go, well, I go there, I take my cash out and I walk away. But behind the scenes, what you've got is an industry standard, ISO 8583, which is a payment standard. And you've got connectivity to all the banks. So by forming a joint venture with them and building a mobile ATM on the front of it, we were able to have this sort of cross-party infiltration. But fintech really came along because of the global financial crisis. Financial services remains beyond critical to our country. I think at the time it was about 19% of GDP. We were 37% of Europe's financial services industry, so we were a real leader in the space. And I often describe London, I don't think of the UK as one amorphous mass. London is a city-state. It has to compete with New York, it has to compete with Singapore, and financial services is how we do that. And so when the financial crisis happened and Royal Bank of Scotland went down, no politician in their right mind was ever going to stand up and say, defend the banks or forgive the banks. It was the complete opposite. And it was a lot of people, forget or weren't around then. Bank bashing was just the topic of every single day. And so a group of us said, well, we've got to try and move that conversation on and start thinking about what it looks like in the future, but without mentioning banking, which is how we came up with this idea of calling it fintech. And it's now, this fusion industry model. So you have the incumbent financial services regulated, looking after people's money, but you have this horizontal, which is all pervasive technology, our phones, everything we do. But the same's now happening in other industries, medtech. You look at the reaction to COVID. You look into green tech. You look into entertainment tech. You look into infrastructure tech. It's not about a winner or a loser. It really is about this 10% of a big number being a lot better than 100% of nothing. And you said you've just been to the Valley. Why we did better than the US in the early days of fintech is because in 1 square mile, you had the regulator, you had the banks, you had the mobile operators, you could go export your services. In the US, you had Silicon Valley writing code to destroy New York. You had New York saying, don't you dare. And then you had Washington trying to regulate it. They just didn't have that ecosystem ready built.
On that, what a fascinating picture. And I think, they say necessity is the mother of all inventions, right? Hence why I think having a crisis, a pandemic, you can see why things are emerging and changing. I'm thinking about, we're on a journey. We've built a fintech in the UK. We're so privileged to have these ancillary services, this lovely regulation that's existed partly because of what your legacy has done. So thank you on behalf of everybody in fintech for what you've done to lay the foundations for us. But when you started out and you did not have those ancillary services, at every opportunity was there another, that's another business that we can create, or that's another business that we can create. Like, how did you stay focused in terms of keeping the course? Because I think it's one of the things that we see when you're disrupting an entire industry. There's all these pathways that emerge. How do you stay focused? And I think this is partly a lesson to people who are innovating in the world of fintech now.
Yeah, I think it's a great question, and something I talk to all in my current company, my team about, which is I'm not an entrepreneur in the traditional sense. I'm not a creative genius. I don't come up with amazing light bulb moments. I love execution. I thoroughly enjoy watching teams grow. Back to the analogy that you gave of your UFC mate and my rugby teams. The beauty of the sport of rugby is you've got every shape and size, every background. You've got bricklayers, you've got farmers, you've got lawyers, you've got accountants, and you've got to make them work together. And if people don't work together, someone gets hurt. And so my greatest joy in building businesses is the execution and seeing teams. And I think in Monetize, if I remember the stats right, we made 33 millionaires from the ground up. So 33 of our team
it's better than NVIDIA.
became millionaires and went on to then do other great things, and many of them now running other fintechs, which of course is what the Valley has. So, but to your question, I'm not smart enough to get distracted, right? Monetize had such an enormous thing to do. We had 14 joint ventures around the world, trying to get banks and mobile operators to collaborate, then working with the payment schemes. It's just endless, and it's still happening today. I remember our CTO and founder selling me this vision of using your mobile phone to buy stuff in a contactless way, and just sort of looking at him completely bemused. I could play Snake on my 6310i and send a text, and that was about it. Yeah. But he was too smart. He was 10, 15 years ahead of it. And so my job was just to cling on to his coattails and just kind of execute behind. So, but you're right. as we got right touch regulation in place, we did the sandbox, we worked with the FCA, we were helped by Treasury. I think the fact that number 10 and number 11 had a very open corridor behind them, physical corridor, when George Osborne and David Cameron were there, they were very encouraging of all of this sort of stuff because they knew the importance of a thriving ecosystem. And so that led to just a huge number of businesses being formed. We're obviously now seeing many of the great companies like yours and others that have come before you become really big players. That said, the world at the moment is worrying because we've got to keep doubling down. It's not enough to say we've created 10 unicorns, 15 unicorns. That's a tiny percentage of if we're competing with the Valley. And we've got to try and encourage entrepreneurs that have done it once to want to do it again, not for them because they've been successful, but for the entire ecosystem.
And on that, I'd love to ask you, as a successful founder who took it to, the holy grail of listing through to now incubating the environment through to investing in the next generation of businesses alongside executing the right team, are there any other enduring pieces of advice that you would give to budding founders in the world of fintech, especially now in the current climate, knowing what we know about the macro environment, things are a bit challenging? What advice would you give them?
Look, my golden bit of advice to every fintech founder, entrepreneur that I meet is your job is to win the contract, not the argument. And there's too many self-proclaimed smart people in the space that think they've found some white space that doesn't exist, or no one else knows exists, and that they're going to be the smartest person in the room, and they want to, keep their IP close to their chest, and that just doesn't work. It's a zigzag. You tack. It's about putting runs on the board. For any cricket fans out there, standing and waiting for a six is not the way to build a business. You've got to score singles all the time, and so I say to a lot of people. A lot of people advise that you've got a small window of opportunity. What they don't tell you is that that's closing from both sides. There's two curtains. So there's someone catching you up. If you've had a good idea, someone's heard about it, and the industry is also trying to block you. So you think it's an 18-month window, it's 9. And by getting runs on the board or tentacles plugged in, even if it's not your dream scenario or your dream deal, if it has to be a loss leader, I think Monetize, we ended up working with 1,200 banks, I suppose, around the world. The first 2 or 3 we knew were loss leaders. We knew they were going to be loss-making contracts. It was going to take a while to prove the platform, but we were transparent with our investors about that. And your operational leverage and your unit economics comes through as long as the platform can be replicated. And I think, the strategy that Algebra has now is exactly the right strategy, which is, one common platform, learn from different markets, and then share that learning. Yeah.
No, thank you so much for the compliment as well on Algebra. The one thing I did want to ask, for you, and I'd love to speak to you about the macro, the UK environment, but just before I do, are there any things that you might have done differently? And you're very humble. It's amazing to hear, and again, so lovely to hear the humility of you saying, you're not the most intelligent person in the room. Your track record speaks completely the opposite. So, is there anything that you would have done differently?
Yeah, lots. I stayed CEO for way too long at Monetize. I was there for 15 years, and no matter how much you feel you can re-energize yourself, you've got too many scars. There's too much. You're dragging too much weed, and I should have handed over to someone sooner than I did. I also think I was probably over loyal to certain people in the business. I love building stuff, and when I was hugely flattered to be asked by Rob Havert to become a founding member of Motive, I found out very quickly I didn't like the investing side because the conversations were often about cutting rather than growing, and I love growing. But I was blindly loyal to a few people in my business that had been outdated with the technology. They were perfect for the time that we started because I didn't have any banking credibility. And so I hired some people out of banks that had worked in banks. But of course, if you think of the dichotomy there or the irony of doing so, We were trying to build something that was faster than the banks.
It's institutionalized almost.
Correct. So they were quite institutionalized, which was great in the early days. But then when we got to scale, we probably should have brought in some new thinkers earlier.
But I mean, the analogies of cricket. I literally had this conversation over the weekend actually with a friend of mine who's a very good opening batsman for his amateur side, and he's averaged 47 this season that's just finished, which is pretty good, and he's a wicket keeper, and he's not a runner. Complete tangent, but he doesn't run. He's unfit and he smokes a vape all the time. But he's a great batsman. So I just there's something deeper there, which is you're right about getting the runs on the board, but you have to make sure you're working hard and you're staying fit and keeping your team going and getting the right balance.
Well, and I learned this, after playing sport, I went into sort of the only thing I could because I didn't have any qualifications. So I started in sort of telephone sales and conference organising and things. And you learn very quickly, to be thick-skinned. You're going to get no's, and a no is a journey to a yes. Everyone, it really cracks me up when you still today meet people. They tend to be ex-consultants or ex-bankers who, the moment you mention the word sales, they go really cold and pale. And they're like, I don't sell. Like, everyone sells. All day, every day. You sell to your family, you sell to your parents, you sell to your mates. You might not call it selling, but you're positioning, right? You're trying to win things, you're trying to get on in life. That's selling yourself, selling your soul. And so it does make me laugh, but I learned that a lot of people are going to tell you no way before you've had a chance to tell them what it is you're trying to sell. And the way you turn that around in an office environment, and I pray people realise the importance of being in an office with your colleagues, is if the bell's ringing all the time. We used to have a bell, so if you closed a sale, you rang the bell.
Yeah.
And that just created a culture of belief. And one of the hardest things in fintech, particularly if you're a B2B fintech, is you're big game hunting. And so there can be a long gap between wins. I mean, we've had in Pollinate, the merchant acquiring business, it can be a year, it can be 18 months in between wins, and you're executing on your existing banks. No project ever goes to plan, ever, right? No software project ever does. Yeah. So, and then the blame game starts, and you have to manage that, and you have to get ahead of it. You have to audit things properly. You have to make sure people are focused on that. But it's draining because you're farming something that you've already got. Yeah. And wins every now and then really help. So what we had to do is find other ways to celebrate success. And we had to educate the whole business that just getting through a particular gating process was actually really valuable and would lead to an increase in the market capitalization of the business. So again, a bit of advice to people that are building enterprise software companies. When you're raising capital, make sure you're setting the right KPIs and criteria for your business, not allowing the investor to dictate its only EBITDA or its only top line growth. It's very important to say that will come, but in the first 2-3 years, we've got to build these tentacles that might not be monetizable yet, but they are barriers to entry. And different investors in different parts of the world look at tech businesses very differently.
Spot on.
In the Far East, particularly in Japan, they're much more excited about the moat you've built around your castle than necessarily how much money you're making at that stage.
This is therapy for enterprise sales folk. I tell you, it's words that we all want to hear because you think you're doing it wrong, as you say, like that pipeline, especially for the whales that you're going after in B2B sales. Rightly, it's super complicated, and if you're working in frontier markets, even more complicated culturally, right? Because it's not the same. You described the US and the UK fintech ecosystem, and you've really been at the forefront of it. So you described rightly, the Valley and New York and Wall Street fighting with DC and the UK, smaller place, easier. So for those 20 years, that's one reason. Geography and size of island, I guess, is one reason why we were more successful. What are some of the other things that you think we did well? And I asked that obviously with a lead-up question, thinking what more do we need to do to keep our position as a leading financial institution or services player?
Yeah, I mean, I don't think anyone can overstate the importance of the openness of government at the time to see the bigger picture. Now, there are some things that have happened since then that have, we probably wouldn't do again if we had our time again. but in fintech particularly, the fact that we were able to convene Treasury, regulator, Department for International Trade. You know, we had trade missions all over the world. And I've always said, you know, the government, whoever the government is at the time, have these incredible assets called embassies all around the world, right? And if you can go and you're conducting business development in a particular part of the world and you can invite people to the British Embassy for a cocktail, and you get a trade minister who's there talking about, you know, Britain's desire to collaborate and the fintech bridges that we negotiated with 5 countries with the then Lord Mayor Charles Bowman, it's absolutely awesome. And so I'd love to see, you know, a lot more of that. I think this scale capital, which I know everyone talks about, but I want to explain what we mean by scale capital, because people go, is it the size of the check? You know, is it $50 million check? Is it? It's actually a cultural thing. So if you go to the US, you have your out and out VCs, your early stage, they have a pretty straightforward model. They're going to back 10 things in a thematic investment strategy, and they know that one of them is going to be a breakthrough, 2 are going to be okay, and the rest of them won't work, but they'll learn from it. And then you go to private equity, which is, it's all numbers based. It's all about cost efficiencies and smashing back office together. This growth investment stage is when you need an investor that really understands those KPIs of growth. And those KPIs of growth and there are some brilliant ones. I mean, we're extremely lucky to have Insight Partners as an investment firm. And you know, Insight really gets growth, and they will be the first to say to you, measuring you on profitability is just one criteria. Measuring you on top line is just one criteria. Getting feedback from your customers is just one criteria. Seeing the energy of the team is one. They really look at it holistically. And we don't have that type of investment culture. You know, I give huge credit to Brent Hoberman and the guys there, the Founders Forum, who are trying to create it, but we've still got tall poppy syndrome. We still chop off the heads of people that are successful. Yeah. We still, you know, which causes the entrepreneurs to go, I think I can get away with it, make a few quid and then go and buy my house in Magaluf and it's all done. You know, there's not many people who are reinvesting in the ecosystem. So all that needs to happen. As it relates to government, and everyone's worried about the budget and all the rest of it, never ask government for permission to run a business. Right? Never offer them veto, never ask them permission. If they can help by convening, brilliant. If you can get ahead of regulation, brilliant. But thinking the government are suddenly going to write you a check or win you some business, they're not going to do it.
Sound advice. Talking about government, are we doing enough on our regulatory frameworks to keep up with the world? Thinking digital assets, thinking very fast-moving environment of finance and tech. You know, I think about the UK's competitiveness as a financial player, and you see murmurs of, you know, depegging the dollar. You hear about alternative SWIFT systems and the like. And the question for us is, we've always had absolutely the best regulatory framework in the world, which has been brilliant, and the world continues to copy it. Are we going at the right pace? Should we be worried? Just a general sense of what more we can do on the regulatory side.
Yeah, I think you have to think of it as an exportable asset, which we proved with the sandbox. 93 countries around the world using the same framework now. You have to look at what's next. And rather than using the problems that we have at the moment as a country that is really struggling financially, you need to turn them into opportunities. So one of the things we did when Philip Hammond was Chancellor is something called the Rent Recognition Challenge, because 71% of London were renting, but banks didn't recognise you paying your rent on time as a mortgage repayment, so you could never get on the ladder. And we did this process, gave grants to a few companies that have now managed to fix that problem. So the things that we're finding tough to keep up with at the moment, we need to try and turn into an opportunity. I think Chris Woolard, now Ernst & Young, but who was running the FCA and the sandbox at the time, is just a superb thought leader on these things. But also, you know, these sort of, what do you call it, post-emporial guilt that we have about monetizing our assets. You know, we should be repay in the world. That's not a strategy. That's what DFID is for. That's what the Foreign and Commonwealth Office is for. We also want to be proud of building and manufacturing regulatory ready bits of technology. So I think, the answer is in your question, which is if you sit on your laurels, people will just overtake very, very quickly.
Agreed. You've got great oversight into not just the UK, but global developments in banking and tech. What's exciting you most right now about where you see, especially the world of finance going in technology?
For me, I talked earlier about the fusion industries. It's actually colliding industries that really excites me now, this collision of industries. So I've spent the last couple of years on a project in the advertising world where you've got these three behemoth toll booths to the internet in Google and Meta and Amazon. 90% of internet traffic are going through these three firms. And then of course there's this, it's like the gates of Rome, and then there are towns and villages of agencies and companies all around them, massive companies. Checkout.com, Shopify, enormous businesses that have been built on these rails. And suddenly that industry is going, okay, but we've now got issues with consumer ID, with fraud, with real-time payments. So suddenly you're seeing these collide, like we saw in mobile banking, where mobile phone operators and the standards bodies and Ericsson and CDMA and all of the companies that were building the infrastructure suddenly had to realize that payments and mobile was going to be entwined forever. You're seeing the same in other industries. And as I look at companies like MasterCard, I happen to have a great relationship with, but true of all schemes, they are that drawbridge. They are the beachfront for the banking industry to start to see what their role is in the future. Bill Gates very famously said, didn't he, that we need banking, not necessarily banks. I can see that opaqueness only getting more opaque for a while now, which is, where is my deposit and where do I put that money from the first second of the month? My grandma used to have on the mantelpiece jam jars of cash. Some was for the holiday, some was for paying the workers on the farm, and that was how she ran her budget. And with the emergence of these amazing neobanks that give you far better usability, far better transparency on where your spend is at, but might not have the government guarantee, which is another thing the government's got to look at very carefully. I'm pleased for Revolut that they're getting their banking license. But consumers will go where they get the best user experience. And in a high NIMS market at the moment and high net interest margin market, the banks feel like they're coming back. But that's a temporary thing. They've got to keep innovating. And anyone who hasn't seen the BlackBerry movie or read the stories about Nokia or Kodak, Blockbuster, there is no reason at all why we won't have marketplaces, maybe not the UK, but other markets in the world where you just don't need the banking infrastructure. You may have one Ivy League central government bank, but then all the rest of it will be distributed technology.
What a world. As you're talking, I'm thinking about, everyone's looking to build a super app, right? I guess that's the end goal for everybody. And I think I was having this conversation recently about EMIs in the UK, and I was in the US, and the US, ironically, for having all these huge companies that run on these rails, have really bad fintech on the consumer level, on the retail level, right? And I explained what an EMI was, and they were like, well, why should I use the EMI? And I said, well, and they're like, you have no protection. And I said, yeah, look, we can't, again, to the regulator, you're not allowed to say we can't. But the whole point of an EMI is you can't use a deposit, which means technically 100% of your money is actually there safeguarded. One. And two, I think 10 years plus now, 20 years plus, trust has been built in these neobanks.
Yeah, absolutely.
And that is the absolute thing. That's the moat, I think, that these legacy banks had. So my final question, Al, if I may, which is, okay, you started in 20 years ago. 20 years from today, you've already started painting a picture of what it could look like. And we haven't used those magical words, artificial intelligence, yet. And I want to bring that in somehow as we end, which is to say, what does the world of finance look like in 20 years' time? Paint us a vision.
Yeah, first and foremost, I hope and pray that the world more societally settles down.
Spot on.
because I find that maybe I'm just getting old and I've got 2 kids, and but when I think back to the global financial crisis, which was a seismic event, no question, I still felt like we had strong leaders. I still felt like we had people that could articulate a vision for their country or for the world to be a better place. And I don't see so much of that anymore. And so there's a lot of talk about where do the next generation of leaders come from? Is it a new world order? Is it from businesses? Is it from different doctrines to the ones that we have today? And I think that has an influence on where we go with financial services. I mean, the one thing you can guarantee is that consumers will drive the change, because in the same way every chief security officer of every bank, when we started mobile banking, told me that they would never allow someone to take their iPhone into work.
Go figure.
Because they own the knock and they own the security, and then enough of your staff turn up and say, well, I only want to use my personal device. So this sort of distributed technology to the edge, giving consumers what they want, will really apply in financial services. And because we're in the industry, we think that it's going quick. There's a very long tail of people that aren't using financial services in the way we do yet. And then back to my colliding industries point, we know now, on average, because it's a high profile legal case from the Fed in the US, that the 3 companies I mentioned earlier, between them, are taking on average 48% of the cost of a good for matching an eyeball to a merchant. So 48%. So if you have a shop, if you make couches and you're selling them in e-commerce, you're inflating that price by at least 50% just to make the margin that you need to make to feed your family. So as data becomes more transparent and consumers start to understand that their hard-earned pound, particularly in a tax environment that we seem to be heading towards, if you're paying out 60, some cases 70% of the money you've earned to tax, you don't want another tax for shopping conveniently. And so I think where people, particularly through COVID, have just gone, well, I just need the goods, come send them to me. I hope that we'll have a much more transparent view of the fact that the £100 you have in your bank account is worth £100. It's not worth £43. And I think that transparency about the value of goods, having grown up on a farm, my brother does a fantastic job of the farm, but he knows what it costs to put strawberries in the ground. He knows what he has to sell them at to pay his staff, and he prays that there's not a force majeure storm just as the season starts. That's real business. So I think we will get back to a place where a consumer and a merchant can interact without people in the middle ripping everyone off.
What a world. And I think, from a algebra perspective, you know the vision, the P2P vision that we're trying to build in terms of our system. So it's one that we hopefully can be a part of. Al, thank you so much for your time today.
Such a pleasure, always.
Likewise.